Hello everyone, my name is Dan, and in this video I will show you how to easily spot liquidity using smart money concept. So let's get right into it. Alright, so I'm gonna use the recent price action on USD JPY to share with you some examples on how to spot liquidity. So let's get right into it. First of all, I must tell you that liquidity can sit on tops or below lows. Okay, so let me draw a example. All right, so once we form a high, there's liquidity resting right above it. All right, same goes with a low, but liquidity can sit above equal highs as well. Okay, so let's say we have a series of highs, maybe 2 or 3 equal highs. By equal, I don't mean perfectly equal. Okay, by equal highs, look, here we have a series of equal highs. We have a high here, high here, high here, and high here. Okay, these are for me equal highs. And usually liquidity is sitting above or below these highs. Now you might ask, well, why? Why does liquidity sit there? Well, let me show you a example in the market. So right here on USD JPY, if you look at this structure right here, you can also place a trend line if you want to, just to make sure that you see that this very structure right here is bullish. All right, so now let's use a retail example where you would look to enter a buy at this support level right here. Okay, the 90% of retail traders, I would say, would enter their buys here on this support and place the stop loss right below it. Essentially, liquidity means stop losses. Okay, why do I have liquidity sitting right below this low? Because there are a lot of stop losses that sit right below this low. And then because of this, because there's liquidity sitting here, what the market likes to do is this. The market tends to go lower, grab this liquidity, and then move back higher. Okay? And then move back higher. All right? So now you might ask, well, how does this help me? Well, it does help you a lot because it will help you understand where the market is at a lot better and a lot clearer. And you can also establish some entry levels, okay? Knowing that you have liquidity sitting right below this low. You then might look for, okay, if price will go and grab liquidity below this low, then I need to look for a entry level afterwards. And then you look lower and you look for a possible demand level after the sell side liquidity is being taken out. And we have a possible demand level right here. Okay, also with imbalance. So we have a possible demand level right below this level where you know liquidity is sitting at. So just because of this liquidity concept, you are now able to view the markets in a different way, to have an edge on the markets. And of course, in the next videos, I will put all the concepts together: liquidity, market structure, supply and demand, imbalance, and we will create some very cool strategies that you guys will then be able to follow. So make sure you are subscribed to not miss out on these future videos. And also, if you want to be able to see the SMC trades I am taking every single day, go ahead and join my Telegram group. The link is down below. Now, let's use the bar replay to see what happened. Okay, boom, check this out. The liquidity was grabbed below this low. Why? Because a lot of people got stopped out. A lot of people that entered their buys here became liquidity. And that's how the liquidity was grabbed. And now you could have had your entry sitting right here, stop loss right below that demand level, and you could have aimed for the most recent high for a nice 1-to-2 risk to reward ratio. And check this out. Check what a instant reaction you would have had on this level. Okay, because you essentially entered right after the liquidity was grabbed, right after everyone was stopped out. You entered based on this demand level here, and as you can see, your take profit would have been smashed immediately. Okay, and of course, in the next videos, I will also share with you some very nice secrets that once price grabs liquidity, I like to call these levels for example, this level right here, a protected low. This level right here that grab liquidity, I like to call it a protected low. And because it is a protected low, it has a bigger chance of holding, okay? Because price already grabbed liquidity. So there's a slimmer chance for price to go lower than this low and grab liquidity once again. That's basically the thought process behind this. But of course, like I said, in the future, I'll make sure to do a specific video on this concept as well, because it is something that I use daily and it's been very helpful. And let's just continue with the price and check this out. Check this out. Exactly what I was talking about. This protected low had an instant reaction on price. Price literally tapped this demand level and then it moved up very aggressively. Okay, and you could have aimed for whatever target you wanted to. So that being said, this is a very simple explanation of liquidity. Please let me know down below if there's any questions. I will make sure to reply to every single one of you, okay? Also, let me know your thoughts on this video. And let me know if you have any ideas for the future, because I'll make sure to check every single comment out. Until next time, feel free to reach out to me privately or in the comment section if there's any questions. I want to wish you all a lovely rest of your day. I want to thank you all for tuning in. Make sure you are subscribed, and I will see you all in the next video. Goodbye.